The US dollars is attracting some end-of-week demand, with the greenback rising by its largest amount in a single day in nearly 3 weeks against the Japanese yen. This move was driven by a combination of better than expected data as well as an uptick in US yields. Starting with the data, U.S. producer prices came in double expectations, rising 0.6% against a 0.3% forecast. Now, normally, PPI would not have much of an impact on the greenback, but when you combine it with jobless claims, which dropped to its lowest level in over 40 years, you got the perfect catalyst for a U.S. dollar rally. And that's exactly what we saw today. Dollar yen bursted above the 200-day simple moving average in a rush of buying that has led to quite an extended move for the currency and basically kind of eliminated the downward bias that we've been seeing in the pair for the past few weeks. Now, in terms of the greenback and where it could be headed next, we do have the University of Michigan Consumer Sentiment Index scheduled for release on Friday. That number should be better because it's a measure of confidence, and we did have a recovery in U.S. jobs according to the latest report. And U.S. stocks, despite today's pullback or the recent pullback, still seem to be holding much closer to their highs and lows. So all of that should foster stronger consumer confidence and help the U.S. dollar extend its gains. Unfortunately, I don't think that the greenback is out of the woods. I think that because the U.S. economy is clearly slowing, and even though the jobs market, which is the strongest part of the U.S. economy, is still holding firm for the time being, according to those jobless claims numbers, the path is very clear, which is that we're moving into a phase where the U.S. economy is going to slow because of global growth and domestic growth issues. Companies are going to curtail hiring, and you're already seeing some of that pain being seen in U.S. equities. So the Federal Reserve is already responding to it by telling us that they're not going to raise interest rates again this year. And I think that's going to come back to haunt the greenback as we start to see the evidence of the Federal Reserve's concerns about growth manifest itself in U.S. data. I'm not saying the U.S. is headed for a recession, but we're definitely headed for our more contractive phase, and that is not going to bode well for the currency. So while you may be enjoying the greenback's rally today, and it should extend its gains on Friday, I think that investors will be looking for opportunity to sell at higher levels than buy. Thank you so much.